Well, I really don't feel like making a video. This is really sad. Another 1,000 points on the Dow today, as if it wasn't enough. Almost 4,000 points this week. So I'm gonna log into my account live and just look at the collapse. I really don't feel like making a video, but if I do it live, I think, and just without any editing, I think I could manage. So I'm logging into my Questrade account now, and definitely I have some management to do. Look at this, negative $20,000 in my margin account, my equity. I was at 4,100 last week. If you look at videos I made last week showing my portfolio, I was at 4,100. Now I'm at negative 19,000. It's a negative because I'm actually leveraging my TFSA to increase my buying power in my margin account, and as you can see, it keeps going up live, 20,000. So now what can I do? I've got about $18,000 on the US side of buying power, but basically I'm leveraging my TFSA. So if you go to my TFSA, my balance was about 66,000. Now it's 59,000, but look at the positions, they keep dropping. So as my TFSA drops in value, my buying power in my margin account drops in value. And my best, like the best quality holding I have is the Qs ETF, and that's down 3,400 US right now. Teva's doing okay, but everything else is terrible. I mean, look at CHK. This I bought at 2.79. Right now it's trading at 20 cents. So this was just terrible. Okay, I don't want to go check my other accounts. I want to focus on my margin account right now. So VIX is crazy right now. VIX is at 47. During the 2009 market crash, VIX was at 80 or 90. In December 2018, VIX was at 30. So 47 is way past December 2018. So this is much worse than December 2018. And it's getting close to the 2009 market crash. All right, so what am I going to do first? So first, I have to sell something. I have to sell a put spread. I have to take advantage of this high VIX and this drop. But I'm not going to sell on the SPY because I'm always afraid of early assignment right now. I've got a lot of put spreads right now on the SPY that are in the money, and they could be assigned early because they're really deep in the money. So I'm gonna sell on the SPXW instead, which is the weekly ticker for the SPX, for the S&P 500 index. This one does not have early assignment. So regardless what happens, it will only get assigned, or it's cash settled anyways, but it can only get assigned at expiration. So I'm going to do a vertical. So I already did it on, my last one was April 9th, but April 6th wasn't there. If I go back to my positions on the SPY SPX for me is the same thing. So I've got April 1st, April 3rd, April 9th. So I'm going to do something on April 6th. On SPX though, April 6th. It's ridiculous. The market's moving so fast. The spreads are crazy. 28.67. So I'm going to go to 28.65 just to see what the expected move is. So I've got 150 on the put side and another 150. So about 300. So 300 points is the expected move. So 28.65 minus 300 is 25.65. So I'm going to choose 25.65 as my short put. 25.65. Oh man, look at the difference. I'm going to have to take a 25 spread. It's too big. I want it to go 15 max. 25.75 and 25.50. It gives me a 25 spread. No, it's too big. Although I do have time. Okay, let's look at another expiry. Let's look at April 17, I guess. So at 28.65, we've got 156 and we've got 157. So another about 300, 310. So 28.65 minus 315, let's say. So 25.50 will be my short put. 25.50. Okay, this one has better spreads. So 25.50, and then I'm gonna go. Yes, okay, thanks. 25.50, and I want to do 15 points. So 25.50 and 25.35. That's 15. I feel like I can't think under this stress. So I'm gonna do one. What's that other message again? So I'm doing one contract, but 15 point wide. So capital required is $1,500. Okay, so that's gonna come out of here, maintenance excess of 18,000, which is linked to my TFSA portfolio. All right, so 2550 put, 2535 long, so 15 points spread, April 17, and this is where you see the market's going back up a little bit. I'm gonna stick to the same short put and look at the spread, how big it is. 510 to 30 cents, so 540 divided by 2, 270. So let's start it off at 3. So trying to collect $3 on the spread. Send order. So it's giving me a warning that European style have different characteristics, but that's actually good, the fact that they don't get assigned early. So sell to open SPX April 17, 2550, buy to open one SPX 2535, so I'm 15 points away, asking for 3, change in maintenance excess. So that's where my capital required comes from. All right, send order. Let's see if it gets executed. Okay, now I have to go fix some positions now because I don't want to have spies anymore. I want to change them into SPX. First of all, I'm gonna go see if I can close the call spreads that I had for a profit. So yesterday I sold a bunch of call spreads. For sure, the call spreads are profitable right now. So this one I can close it for 6 cents. It's already showing me a profit. I'm gonna go ahead and close it just to confirm some profits. Buy to close, sell to close. Although I'm pretty sure they're gonna expire worthless. Buy to close, sell to close. All right, send order. Now I'm gonna do the same thing for this one here. Order filled. All right, good. All right, so I just made a profit, a confirmed profit here. This should update here. I guess it's a little slow. There you go, 223. So made a confirmed profit of about $70 by closing that call spread that I had opened just yesterday. Let's look at this one here. I'm gonna remove the put and just leave the spies, and I'm gonna try to close it for my profit. So 10 cents, send order. It's a little slow for some reason today. All right, buy to close, sell to close, 3 SPY for 10 cents, send order. So now I've got 2 orders. Just change it to 11. Yeah, Questrade's very slow today. I'm sure everyone's on their platform, and the server might crash actually, and you can't even do anything. All right, so this one's a good profit. I'm gonna try to close it. Why does it keep doing that? Why does it keep showing me something else? All right. Oh, holy crap! This one's still high. Maybe I can hold on to it a bit, but I mean, it is showing me a good profit, 250. I mean, I could use it. Let's go for 35. I think I collected, yeah, this one I collected, I think, $1.20, that's why. So buy to close, sell to close, 35 cents, send order. And then this one here, it's showing me a profit as well. Let's close it. It looks like it's the best time to sell call spreads right now, not necessarily, but thing is, as soon as the market rebounds, your call spreads are going to be in trouble. See, it keeps showing me the legs I just deleted. It's really slow. Come on, get out. This leg 3, leg 4 line should not be there. I just deleted it, but because it's slow, there we go. All right, close it for 15 cents. Buy to close, sell to close. Come on, get there. All right, filled. Why won't these ones get filled? I'll adjust them later. So I think this one, I've got March 25th and March 18 already. So I'm going to go to the next one. Usually Questrade is not this low at all. March 25th, March 20th is the next one. Showing me a small profit of about $70. I'll take it. All right, come on. I'm just waiting for this to, all right, 10 cents. Buy to close, sell to close, 30 cents. All right. So now I'm going to go make my adjustments for those that don't want to. So what's wrong with this one here? Oh, I see this SPX is moving up a little bit. So let's bring it down to 295. And this one, let's increase it a bit. It got executed. All right. So let's look at confirmed profits. Right now it's at 370. I just want to sell something because I want to take advantage of this high VIX. When the VIX is high, you want to sell put spreads, or you want to sell options. Obviously, you don't know how long this will last. That's the problem. I think that's the mistake I'm going through right now, is that all my put spreads are in trouble right now. Even though I still have time, I have like until April, but who knows how long this crash is gonna last. If they don't call this a crash, I don't know what a crash is. This is definitely a crash. Actually, the only good thing is that if we actually crash, if this is considered a crash, then we're done, and let's get this over with, and then we could start a new bull rally. All right, so 11 cents, 10 cents. All right, let's put it to 12. There we go. This one too, probably. Oh, come on, this one should get filled. What's wrong with you? 7 to 11, and I've got 10, and it won't get filled. Big babies, fine. Take your 11. So now I just want this to get filled now. Man, the spread is huge. Let's go to 285. Come on, what's wrong with you? Let's see. Well, the spread moves so much I can't even calculate what the mid price is. So 730 minus 160 divided by 2. So mid price is 285. So if I go 280, it should get filled. Or should I just hold on and wait? If the market continues to drop, it's going to whatever, 280. 280 should get filled. All right, I'm leaving it at that. All right, so right now you could see that I've closed $800 of profit almost, just by closing my call spreads that I opened yesterday. But now I still have, as you can see, negative 19,000 in my margin, and that's because of all these put spreads here that are deeply in the money. Look at this one, 328 short strike on the SPY. The SPY is at 287 right now. 308, 305, 300, 295, 290. Well, these ones are not so bad, right? But this one here is bad. Of 326. So what can I do? First of all, I want to deal with MasterCard here. 275. This is ridiculous. What can I do? All right, so I want to, let's see if I can close. I sold a call spread yesterday for 30 cents, I believe. Let's see if I can do something with it today. I mean, what are you going to close 30 cents for? Yeah, no, can't do anything with it. What can I do now? I want to roll this trade forward. I don't know if March 20th is enough time for MasterCard to reach 325. Plus, I don't want to get assigned. I mean, there's really no time value left in the options. And look at the delta. It's close to $1. If it's close to $1, that means it acts exactly as a stock, so there's no time value. So if I want to roll this over, let's see what happens if I roll it to April 17, let's say. Man, the system is very slow. All right, April 17, 3 at the same strikes, of course. So 325 at put, buy, April 17, 3 contracts, buying the 320 put for protection. So my max loss is the difference between the spread times the number of contracts I have. But let's see what happens now if I roll this over. See, if I roll this over, it's going to be for a debit. But the advantage is I'm giving myself time for MasterCard to come back up above 325. I think I want to do that. Plus I can sell a call option if I want to make up for the 75 cents that I'll have to pay. So let's start the bid at 0. Okay, yeah, I really have to roll this over. It's stressing me too much. March 20th is 21 days. Do I think that MasterCard will go above 325 in 21 days? I don't know how long this market is gonna crash. DFN is down 10%. So if you want to buy a great dividend stock, you can buy DFN right now. But who knows if it's the lowest point. Okay, let me just focus on one thing. See, that's why I don't like to have too many positions, because then it becomes hard to manage. So buy to close, sell to open, buy to open, 325, 320, 325, 320, 325, 320. All right. It's weird though that I can't sell the call spread, that I can't close the call spread for a profit. I opened it yesterday, I think, for 30 cents. I should be able to close it today. It dropped since yesterday. But I guess, yeah, look at the spread. It's too high. All right, so nothing I could do there. Now I need to do the same thing with this here. Now, instead of rolling it with SPYs, I want to roll it with SPX. So what I'm going to have to do is actually close it completely. Actually, let's see what it's trading at. 420. I'll have to close it for $5. and then do what? 288. I don't know if I want to roll it into another SPY, but just give it more time, or if I want to roll it into an SPX just because I don't have to worry about early assignment. But now I've got all these to deal with. Too stressful. Let's just take it one position at a time. I could leave. I don't know if I still want to roll the ones that are still not in trouble. I mean, this one 280 is not in trouble yet, but it's getting close. 290 is not so bad. But I have a lot of time left. I have 35 days for the SPY to come back up above 290. The thing is, I don't know. No one knows if this is the bottom or if it's gonna get even worse. But you have to be. That's why you can't really make assumptions. Just be mechanical. So 295, 290. I think this one I'm gonna leave, or maybe I could sell a call spread against it. But if we come back up, then my call spread becomes in trouble. If we continue down, my call spread is going to give me some good profit. But the thing is, 33 days is a lot of time. Okay, let's just start with this one here. Actually, let's see what happened with MasterCard. Yeah, it's not going to get executed. Alright, so my SPX went through. Okay, so where's my SPX? So my SPX vertical put, April 17, 25.50 short put, went through. Alright, I've got 49 days for the SPX to be above 25.50. I think I can relax for this one. It's got a good chance. Let's hope. Alright, let's deal with MasterCard now. I want to roll it forward just because I don't want to get assigned. I'm going to have to pay for this. Alright, let's look at something else. So let's look at this. See, I'm still hesitating. Should I close it? Should I roll it to a SPY or roll it to an SPX? I think I'll roll it to an SPX. So first I have to close it, and then I have to open it with an SPX at the same strikes, but then I'll choose further expirations. And actually, maybe I'll sell a call spread as well. At this, do an iron butterfly. Yeah, I could close this and do an iron butterfly more in the future. And it's hard to think when you're stressed. So if I turn this, if I roll it as a SPY, what's the risk? The risk is if we continue to drop, then I'm going to get worried about early assignment. If it goes up, it's good. If I sell an iron butterfly with a SPY and it goes up, it's good. If I sell an iron butterfly with an SPX, thing is, which expiration should I take? That's the other issue. I don't want to have the same expiration. I already have April 17. What should I roll it forward to? That's the other dilemma. I don't want to have several spreads expiring at the same time. It's going to be very stressful. Let's look at my 21,854. What the hell? What the hell? 811 confirmed profit from the call spreads. Back to 19,444. TFSA is 59. I could definitely close this call option that I sold, but it's so sad. I don't want to focus on anything else right now. I guess I'm just distracting myself. Oh, L Brands didn't drop that much. That's weird. Okay, Bombardier 104. Novavax for some reason went up, so that's good, I guess. Actually, let's see if I can roll the call option, because I had a 15 strike. Sell. So March 20th is my expiration. So let's go to April 17. I've got 2 of them. I could get some credit out of this. Let's go 17 maybe. 20 and 90. Okay. So at least it's for a credit. The max I could do is 17. Get an extra 45-cent credit plus $2 more of. But I'm sure Novavax is going to drop after this. Actually, what happens if I go April 9th? Do I have more strikes? Okay, I'm going to pick April 17, strike 17. Try to go for $1. Alright, so I'm rolling my existing call option here that is definitely in the money right now because Novavax went past my strike of 15. I'm moving it to a 17 strike, but I'm able to do it for a credit, as you can see here. I'm going to start off with $1, so, and then see what happens. So buy to close, March 2015 call, sell to open, April 17, 17 call, $200 credit. Let's try. Bring it down to 90. Yeah, alright, 80 is the lowest I'll go, and I'm leaving it at that. Okay, I have to go back to my margin. So what's going on with this here? MasterCard. Come on, it should get executed. Okay, I'm gonna leave it. Gotta do something with the SPY. Can't just leave it like that. I don't want to get assigned. 328. If I close it, it's going to be for a loss, of course, but I'm going to immediately sell an SPX at the same strike. But which expiration? Oh, I could at least keep... Oh, I could keep the same expiration at least and then worry about it after. Yeah, okay, that's what I'll do. I'll worry about it after. So let's start with 4. So I'll close the SPY and then change it into an SPX at the same strikes and the same expiration. But at least with an SPX, there's no early assignment. Gives me time to worry about all these. I'm just worried right now about early assignment because if I get assigned 300 shares of the SPY at 328, I don't have the buying power for it. My buying power, as you could see, is 48,000. It was 60,000 yesterday. Now it's 48,000. Jeez. Why is this 14,000? Why did my maintenance excess drop so much? What the hell? My maintenance excess dropped a lot. Is it because of this here? But this should help me. That's weird. My maintenance excess dropped a lot. Confusing. All right. Now look at my profits change now. When I'm gonna... Where did my order go? Okay. When I'm gonna close this for a big loss and then sell the SPX instead. Actually, let's go see what the SPX is, what I can get out of the SPX. So 328 is my strike. So March 13, it's 14 days to go. Yeah, probably can't get much out of it. 3280 and then buy 328, yeah. And the equivalent will be 3275. No, I'm gonna go to 3265. See, with the SPY, I would be going at 3230, but the spread is too big. So I'm going with a 3265, which is 15-point spread. See, on the SPY, I've got a 5-point spread, but I've got 3 contracts, so capital is 1500. In this case, I'm going with a 15-point spread, but 1 contract, so same capital. So 3265. 3280, 3265, all right. Let's see what I can get out of it. Holy crap, look at this spread. That is ridiculous. What the hell? I have to choose something between 370 and 24. What the hell? So I can get about 1520, yeah. Oh yeah, which makes sense, which is the price of the spread, yeah. But for sure, SPX is not coming back to 328 come expiration, so I'm just going to have to roll it again. If you look at March 18, my short put is at 326, buys at 288, so 326 minus 288. It moves so fast I can't even calculate, and right now it's selling for 38. So yeah, there is really no time value in the option, so I could get assigned really easily. I need to change it so that I don't get assigned, but then selling the SPX is ridiculous. All right, so let me go back, see my maintenance excess about 15,000. Hey, look, back to negative 17. Jeez, man, what the hell? Alright, so I'm gonna go to SPY here. I have to do something with this. Let me just close it. Let's start off with 4.5. This is very sad. I'm gonna incur a major loss, and then I'm gonna go ahead and sell the corresponding SPX put spread. That's gonna bring in a credit, but most likely I'm gonna have to buy it back by March 13, and then do what? Then I'm going to have to sell another one. Then I'm going to have to sell another. But who's selling these? Who's buying at 328? Will there always be volume? Thing is, I cannot get assigned. If I get assigned, I'm in trouble. I don't have enough buying power, so I have to do something. Alright, I'm going to close it. Buy to close, sell to close. I'm going to pay $13.50. Might even pay more, actually, because that's not the final price. But now I want to sell. I think I'm going to do an iron butterfly on the SPX for March 13, because for sure the SPX is not going to reach 3,280 by March 13. So at least the call side is going to be for a credit. Actually, let's go see what I can get out of it. Iron butterfly, March 13. My Questrade is really slow today. March 13. I see it's not even showing. I want the 3280 strike. 3280 short strike is over here. I want to sell it, and I want 15 point spread. So 328 will be 3295. And then on the put side, what's going on? Relax. On the put side, it'll be 3265. One contract. 3265. All right, what does that give me? I can get a credit of about 25 plus 29.45 divided by 2. I'm getting less. I'm getting 14.85. Oh yeah, I guess that makes sense. I cannot get a perfect 15. My spread is 15, so the most I can get is 15, of course. So this would allow me to get 14.85. So the call spread, as you could see here, is I'd be getting... Let's see how much this call spread is actually generating as a credit. Wow, the call spread is nothing. Call spread is giving me about 30-cent credit. Well, that's because I'm so far. And there's actually no benefit to selling it because it's just a useless risk to take to get a 30-cent profit, but then you're risking 15. Wow, you're risking a big difference. Jeez, what am I gonna do? What a bad timing. What a bad timing. Alright, let's go back to the SPY. So if I close this, I still have to deal with, I think 308 is fine. I won't touch the 308. I mean, I've got time. Yeah, I won't touch the 308. Let's just see which ones I have to deal with. I have to deal with March 13. I have to deal with March 16, March 23rd, March 25th. Holy crap. 1, 2, 3, 4, 5. This is not good. 1, 2, 3, 4, 5, and 6. So I'm gonna have to deal with 6 of them. Gonna have the capital for each is about 1,500. 1,500 times 6, $9,000. Wow. I'm gonna confirm about $9,000 of losses today. All right. So first of all, let's see if I can sell calls. Well, I think I just sold the calls on these ones, right? If there's anything I can sell calls on, same expiration, March 23rd, 325. I think I just closed that one. March 16, yeah. 280, no, we're fine. 290, we're fine. Maybe 305. Maybe I could sell a call on 305, although it might be too early though. I still have 31 days to go. If I sell a call on 305 and it starts to go up, then whatever. I'm gonna sell a call at the 305. Actually, I have 308 as well. I'm gonna sell at 308 first. All right. So let's sell a call at the 308. So I'm gonna change this into a call, and I'm gonna sell, and I'm gonna go at 8 plus 5 is what, 13. I can't count. 2 plus 3, yeah, 13. So same width of the spread. So here I've got 308, 303. That's 5 points. 308 plus 5 is 313. So I'm selling the 308 call, buying the 313 call for March 27th. This is how much I'd collect. It's got a 5 delta. Alright, so let's go for it. So I'm doing this to reduce max loss on this trade in case it goes even worse. I think I collected, here you can see how much I collected to begin with. Collected 80 cents or something. Can't even, I don't feel like counting. 47 and 30. Collected 77 cents on this one to begin with. And now if I collect an extra $1.40, then my max loss, instead of being $5 minus 77 cents, it's going to be $5 minus 77 minus $1.40. That would be my max loss. So I'm trying to reduce max loss right now on this spread by selling a call spread against it. It has a 308 short put, and obviously the SPY is way past it. Sell to open, March 27, 308 call. Buy to open, 3 SPY. March 27, 313 call. So you sell the 308, you buy the 313. Alright, send order. It got filled. Nice. Okay. So now I've got an iron butterfly on the SPY over here, March 27. Okay. And okay, one step at a time. Where's the other SPY that had a, I've got the 305 here. Yeah, I think I will. Like, my only concern is, what if the SPY comes back up above 305 come March 31st, and this trade would have been a winner. But I think right now my goal is to reduce max loss, because this is crazy. Even if it does, even if I change this from a winner, but I mean, it's still safe. I mean, what's the, yeah, delta's 89. I think I'll hold on to it. I mean, it's not in trouble that much, because just because I have 31 days. I mean, SPY can easily come back up above 305. That's if we don't continue to crash. But just out of curiosity, let's see if I sold a call, how much I can get. So sell 305, buy 310. It collect about a 180, 185. I already collected 80 cents for this trade. So my max loss would be the difference, worst case scenario. 288, 305. That's like, well, the SPY moved easily 40 points in a week, but it doesn't mean that it can go up 40 points in a week. But it could go up 20 points in 4 weeks. That's very doable. I have a feeling I should wait on this one. Yeah, I'll wait on this one. Although getting that call is tempting. You know what? I don't trust the market. I'm gonna sell. All right, let's go for, what's the delta on this? 11. So sell to open 305, buy to open 310, and it is the same strike as this one. Yeah, 305 short, 5 points wide, 3 contracts, 190. Send order. So this one hasn't been filled yet. See, the SPY is already moving a little bit higher. But yeah, I want to close this because I don't want to get assigned. And then I'll sell the same thing on the SPX. Yeah, let's just be mechanical. Why won't this get filled? It should get filled. All right, I sold that vertical call. So now I've got 2 iron butterflies on the SPY. So 300, I'm not going to do anything. Or should I? No, I'm not going to do anything. I've got 32 days. And the SPY is trading at how much? 289. No, I'm not going to do anything. This one I'm not going to do anything. This one I'm not going to do anything. This one either. So it's really just March 13th. So 1, 2, 3, 4, 5, and 6 that I have to deal with for now. But it could get worse. All right, so now I'm in the process of dealing with this one here. So let's close this. Let's get it done with. Let's get it over with. Although market's coming back up though. Although I can't trust anything. Let's see what the we're still down 800 points on the SPY, 729. All right, so now if I look at the SPY chart today, just want to look at it for fun, doesn't mean anything to me. We've had this happen many times and then we just continue crashing harder. So I'm going to finish this plan here. Anyways, 328 is too dangerous. So I had to end the video and continue the rest of the video the next day. But as you can see right now, my margin account is sitting at a negative 28,000 equity. So here's what I ended up doing. So first of all, I had a MasterCard put spread expiring March 20th, I believe. I pushed it to April 17 to give it more time for MasterCard to go above 325. Also, because I was afraid to get assigned early. So you can see here, it's the first line here, rolling it forward from March 20th to April 17 just for more time. But I actually had to pay for this. I paid 30 cents times 3 contracts. And then I had this new put spread on the SPX. I went with the index because they have no early assignment. Right now, as you can see, the market is dropping like crazy. So if I do it on the SPY, there's a risk of getting assigned early. So I did it on the SPX for April 17 at a 25.50 strike. I think the SPX right now is at 2900, 2954. So it should be good, right? It looks good, but who knows how far the market can keep dropping. And then I converted my SPY put spreads that were deep in the money. So remember, I had SPY put spreads at 328 and 326 short put. Well, I converted them into the SPX just so that I can avoid early assignment on the SPY puts. Okay. Plus, I added a call spread to them. I sold a call spread at the same short put, so creating an iron butterfly in case the market keeps dropping, because I don't think the SPX is going to come back above 3260 or 3280 come mid-March. So at least the call spreads will expire worthless and give me whatever credit I can get. I had 3 contracts on the SPYs, 5 point wide, so my max risk or the capital required is about 1500. So I ended up doing 1 contract on the SPX, but I went 15 points wide. So you could see 3260 to 3245. So that's 15 point wide. So it's still $1,500. So my max risk is technically 1500 minus any credit I collected to actually open the trade. Okay, so all these here are just SPY put spreads that were in big trouble that I just converted them to SPX so that to avoid early assignment. I still have some SPY put spreads that I don't think are in that much trouble, so I kept them as SPYs, but they could be in trouble depending what happens next week. So March 23rd, 325 strike. These ones had call spreads attached to them, but I closed them. If you remember at the beginning of this video, I closed them for a profit, but I might open other ones next week at the same strike of 325. So March 23rd, 325 strike. March 25th, 320 strike. March 31st, 300 strike. So this one's not too far, right? I mean, we're at 296, so that's not far, and I have until March 31st. So it's not far if the market rallies back up again. Even if it rallies back slowly, it's safe. The true risk comes if we just keep crashing like we just crashed last week. So obviously no one knows what's gonna happen, so that's what's scary, and I feel like I can't handle this stress. I feel like I just want to close all my put spreads because it's becoming too much to manage, and I've got easily $6,000 right now already of confirmed losses. I mean, look at this one here. This was 295 April 1st. It looks good. This is 290 April 3rd. This is 280 April 9th. Right now the SPY is at 296, so it looks good, but this market is so unpredictable right now. I'm disappointed because I was really happy with this put selling strategy. It was working for me very well and easily, and I find that it makes sense. The only problem is the market decided to drop the fastest it has ever dropped it in history. So it's really just bad timing, and I think my size is too big. I used to do $500 of capital required per trade, and I just recently switched to $1,500 capital required per trade. So now I've got several 1,500 risks per trade. April 9th 280, and then I've got March 30th, March 27th. They were 305 puts and 308 puts, but then when the SPY dropped below them, I decided to sell a call spread as well. You saw this at the beginning of the video, to collect the credit and reduce max loss. So the idea is, if the SPY continues to drop, well, then the call spreads are going to be profitable for me, and basically they reduce my max loss in this trade because the put side is going to be a loss. If the market bounces back up, then I'll have to close the trade at around the short strike. So at around 305, I'll try to close the trade. Obviously it won't be for a profit, it'll be for a loss, but at least it'll be for a smaller loss. So the call basically is for mitigation, for sort of like a hedge in case the market continues to drop. If it doesn't, well, I'm going to lose a bit on the call, but I'm going to gain a bit more on the put. So that's what I ended up doing, and let me know what you think. What should I do with this negative 28,000? It's not exactly 28,000. The reason it shows such a big amount is because the difference between the bid and the ask price on the index, on the SPX, is really high. For example, this line here shows a loss of 36.95, but how come this line here doesn't show anything? If this shows a loss, this should show a gain, or vice versa. So the only reason this negative equity is super inflated is because of the difference between the bid and ask on the index. It's still a really high negative equity. I think I'm at around 20,000. Surprisingly though, my TFSA is still at 61, even though the market keeps dropping, but I think it rallied towards the end of the day on Friday. But will we continue this rally, or is it just a small breather, but next week we're going to drop even more? So that's really the $1 million question. But that's why I liked put spreads, because I felt like it worked in that I felt it was a strategy that works in this situation, because as the market drops, you sell a new put spread that's even safer because it's further away from the current market price, plus you're getting higher premiums. But normally this works if the market drops like it drops normally. It drops a little bit, corrects a bit, and then comes back up. You look like in the past year, like, you know, something like here, this is fine, this is also fine. You know, this over here, it's SPY dropped, but the put spread strategy would have worked because it dropped a little bit, but then it came back up, it dropped a little bit, and then eventually came back up. So even if you lost temporarily here, your next put spreads are going to be profitable, and overall your put strategy is going to be profitable. But now if we look at this here, this is just absurd, and we don't even know if it's going to continue. From 338 to 296 right now, but at some point it was trading, I think, at 286 or something. So 338 divided by, let's just see what's the lowest. So 288 divided by 338. So that's about 15% drop in a week for the SPY. In 2009, we dropped from the highest to the lowest point. It was about 54%. We dropped about 54%. You could see that we were trading at the high at around 1.5, and the low was about 73. I think it was even lower. I think it was 66. But let's say 73 to 155. So 73 divided by 155, 47. So yeah, minus 1. So we dropped about 53% in the 2008-2009 crash. If we look at December 2018, we went from 292 to
236, about 292, 236. So that's a drop of about, I think it was about 20%. Yeah, so -1. So it's about a 19 to 20% drop was in December 2018. So most corrections are about 20%, but the biggest crash was in 2008, was 54% drop. So right now, what are we going through? We did 13% in just 1 week. Are we going to continue even lower? Are we going to surpass the 2009 crash? I mean, if we drop 50% like we did in 2009, the SPY, which was at 338, could potentially reach 169. Do you imagine the SPY trading at 169 after it was trading at 338? So it's really, I don't know, it's really scary. It's a mystery. I hope it's just a 20% crash like December 2018. But the scary part is that the velocity is much, much faster. Usually, if something drops hard quickly, you would think that it's going to come back up just as fast. I find the scariest part is the slow, something that drops slowly but consistently. I think that's scarier. For example, from 2000 to 2003, that's 3 years. The market just keeps dropping, as you can see here. So this here was terrible. Slow, steady drop, slow, steady decline. But usually a faster decline is followed by a quick recovery. From 2000 to 2003, we basically took from 2003 to 2006 or 7 to recover. What we lost in 3 years, we took about 4 years to recover it. And then right after that, we had a crash to erase everything that we gained. So really, the 2000 period was really terrible, because anything you gained from 1994 to 2000, you had to wait till 2013 to regain it back. So you needed to wait 13 years to recover what you gained from 1995 to 2000. And right now, who knows how low can we go? Will this be the lowest point here, 200, or can it come back to 82? Probably not 82. So my strategy ongoing right now, so my strategy moving forward, I think, will be, so my last put spread that I sold, which is over here, April 17, 25.50 short strike. I sold it when the S&P was at around 28.80. So my next strategy is, if I do sell another put spread, it will only be if the S&P drops considerably more than my last trade, which was at 28.80. So if the S&P 500 is at 27.50 or even 2700, then I will sell another put spread. If not, then I won't do anything. And if I do sell another put spread, I'm going to reduce the size. I'm not going to use 1500 in capital. I'm going to use $500 in capital. And in the meantime, I'm just going to try to recover these ones, try to sell some calls wherever I can to reduce max loss. So if the market opens at 296 next week, so the same thing, I'm going to try to sell some calls again on this one, on this one, on this one. Maybe not this one, because it one's I consider safe, but I will definitely sell some more again on 325 and 320 to help me reduce max loss. So remember, when I opened these trades, I collected a credit. Some were 60 cents, some were 80 cents, some were 90 cents. And my max loss is the difference between the strikes minus the credit collected. So most of these have a max loss of $4.10 about, but I've got 3 contracts on each. So that's $400 times 3. So that's about $1,200 US on each. But that is reduced by any call spreads I sold and profited from. So if you're a long-term investor, really there's nothing to worry about. It's actually just a good time to buy more of your favorite stocks. If you're a dividend investor as well, you're going to have better yields if you buy right now. But definitely if you have short-term trades right now, that's the problem, especially if they're short-term bullish trades. All right, just wanted to share with you my terrible portfolio that's almost collapsing. So if you have any questions, leave in the comment section below. Any suggestions, please, I want to hear them. Leave in the comment section below. And if you still feel like trading and want to open an account with Questrade, use my referral code in the description below the video to get up to $250 back. Thanks for watching.